Hey YouTube, this is the Robinhood Investor. Today I'm going to talk about Netflix stock, ticker symbol NFLX, currently priced at $405 per share. After hours, it dipped 20% after it reported earnings. At one point, it was trading around $525 per share, but intraday it dropped 20%. Past year, down 28%. Past 5 years, up 199%. So you could see it significantly dropped ever since October, early November of last year as the growth starts to slow down. Make sure to stick to the end of the video for my opinion on this stock. So Netflix is a streaming entertainment service. They produce movies and TV in both the domestic and international market. Scrolling down a bit, you can see market cap is $225 billion, P ratio is 47, and dividend yield is 0, which means they're reinvesting all profits back into growth. Taking a look at what analysts' ratings are out of these 47 analysts, 72% give it a buy rating. And taking a look at the financials annually, you can see revenue has been steadily increasing. Same goes for the earnings. That's the blue bar right here. And it's great to see that kind of growth year over year. Taking a look at the quarter, it's been steadily declining quarter after quarter. Same both for revenue and the earnings. So you can see Netflix, the growth is slowing down. Taking a look at the analysts, it's a 1.8. Not quite strong buy, but it's a buy. And out of the 41 analysts' price targets, you can see average price target of $179 per share, which is slightly above the current price of $164 per share. So taking a look at the actual earnings report, you can see that Netflix, they talked about some of the biggest TV shows like Squid Game and the movies Red Notice and Don't Look Up. And it's one of the studios that won the most Emmy awards, as well as won the most Emmy awards, and it's been nominated for a lot of the Oscar awards. So great to see its recognition. And full year revenue at $30 billion grew 19% year over year. So still great to see that double-digit growth, high double-digit growth, and operating income rose 35% year over year. So great to see Netflix still growing steadily even at its size, creating more content, distributing more content for its users, and taking a look at the actual financials year over year growth. So you can see Q4 2020, 21%, Q1, 24%, 19%, 16%, this quarter 16%, and then forecast is 10.3% for this quarter. So you can see it's steadily decreasing in terms of the growth, but overall, they're still growing double digit. Operating income, you can see it's also steadily growing. And then it took a dip Q4, but it's projected to go back up this quarter. I think overall fourth quarter, it just takes a dip. You can see here. And operating margin, you can see it's steadily increasing year over year. So from 14% to 22%. Net income, you could also see it's steadily growing year over year. So great to see that growth. Diluted earnings per share, $1.19 versus $1.33. So overall, it seems like Netflix is still growing steadily year over year. But the growth isn't as significant as before. I mean, during current climate when everyone was watching TV and movies, now there's more opportunities to go outside. So that's why I see Netflix is taking a hit. Also, there's increased competition across the board. So you can see that market share was lost for Netflix. So you can see also global streaming paid members, year over year growth is steadily decreasing for that growth. And the net additions steadily decreasing. Taking a look at the breakdown of all the competition, scrolling down a bit, you can see So Netflix is one of the large ones, but overall video streaming app revenue, you can see it's growing year over year. And this is calculating all revenue in the Western world. This is the US market. So from 7 billion in 2015 to 24 billion in 2020. Projected app revenue continues to grow. Now taking a look at some of the top streaming services based on app subscribers, the top ones are Netflix, Amazon Prime Video, Disney Plus, Apple TV is up there now, Hulu, Peacock. Scrolling down a bit, you can see US video streaming app usage. So this is purely based on not the subscription, but usage. YouTube's #1, and then TikTok, Netflix, Disney Plus, then Prime Video. So it's great to see Netflix being one of the top, but you can see that there's competition that's increasing, and as there's more competition, it'll put more pressure on Netflix trying to create more content, and with more content, that'll increase its expenses and also hit into its profits. So my overall thoughts on Netflix is that even though it still continues to grow double digit, at one point that growth will slow down, and as there's increased competition, it'll put pressure on Netflix to keep creating more content, eating into its profits. And because of that, I'm not holding any Netflix stock. I prefer to be in YouTube or Google stock and Amazon or Amazon Prime, just because they're more diversified versus Netflix. It's purely just a streaming service, and it's a very, very competitive space with people's time, as well as all the different options for television and movies. So I personally don't hold this position and don't plan to open a position anytime soon, but I do have some exposure through ETFs. That's all for this video. What are your thoughts on Netflix stock? Comment down below. Remember to use my referral links below, and both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up, and if you want to learn about investing, subscribe to this channel. See you in the next video.